Welcome, welcome. The next area we're going to talk about is statements on standards for accounting and review services. And there's all these exciting changes in this area called SSARS. And this stands for Statements on Standards for Accounting and Review Services. These are different types of services that we can perform on a non-public entity. Non-public is a company that's stocks, bonds are not publicly traded. So 1933, 1934 Federal Securities Regulations Act talks about basically what's considered a public company, certain traded on a national exchange, or certain amount of assets, certain number of shareholders, things like that. So in this area, Statements on Standards for Accounting and Review Services, basically what we're looking at is we're saying that a CPA can be associated with financial statements for different types of engagements. Now, there used to be two engagements, reviews and compilations. Then, under the ARSC, Accounting and Review Services Committee, by the AICPA, they said, you know what, let's restructure this because there's too much confusion. Because we know that in an audit, remember we've talked about an audit where you're giving an opinion, an audit report. In our opinion, the statements referred to above and blah, blah, blah. That's looking at either public or non-public companies, but there you're giving something called positive assurance. Then we have other situations where we're giving what we call limited or negative assurance. We have situations where we're giving no assurance, and people in the past would look at a compilation where you're giving no assurance, and they would kind of think that it meant more than it really did. So we came out with these rules in order to really clarify. That's why it's called Clarified Standards. And if you think back, remember we talked about the Clarified Standards for auditing, for basically doing an audit. Same thing here. They wanted to come up with these clarified standards to kind of look similar to the ASB, Auditing Standards Board rules, but here this relates to Statements on Standards for Accounting and Review Services, and this relates to different types of services that we can perform. The main reason, too, is to make it easier to read, to understand, and to apply the rules. Therefore, these rules we're talking about now relate, for example, to non-public entities. So, what we're going to be looking at under SSARS are three different types of engagements. And let me give you a quick overview of where we're going to be going. Woohoo! Hang on to your seats. And then we'll go into the detailed, nitty-gritty detail of looking at the reports and so on. So let's come on over. What we're looking at is SSARS, three different types of engagements. This one is called the preparation of financial statements. It's going to be covered by ARC 70. And what's happening here is in the past, someone would ask us, hey, can you prepare some financial statements for me that someone else is going to audit, review, or compile? Well, we didn't really have any standards that told us how to do it. That's why we created these under ARC 70 as preparation of financial statements. Basically, it says, hey, you're using QuickBooks and someone wants you to print out these financial statements that someone else is going to do work on. That would be covered by SSARS. If you're going to prepare the statements and then you're going to do the work, it's not covered because the work itself would be covered under SSARS. But if you're going to prepare the statements given to someone else to do, then we have certain standards that say, hey, here's what you're going to do. We have a compilation where in this case, we're giving no opinion, no assurance. However, we're assembling or compiling these things in the form of financial statements. We have to read them and do a little bit more work here. So you'll see in a few minutes what has to happen here as far as what kind of work we're going to have to do is understanding and reading as well. So we'll look at that later. Over here is a review, and what's happening with a review, now you're giving some sort of limited or negative assurance. Because in this case, we're saying, hey, I didn't do an audit, but I'm not aware of any problems with these statements. You're not saying that they're perfect, hey, because they're far from perfect. The only thing perfect? My wife. Ask her. But they're not perfect. However, we're giving limited or negative assurance saying, I can't say it happened, but I'm not aware of any adjustments or modifications in order for these statements to be in conformity with that financial reporting framework or GAAP or OCBOA or whatever framework we're using, which we'll talk about later. So what happened here is now we have standards that tell us how to kind of prepare these statements so someone can work on them. Here we're saying that the old report used to have 3 paragraphs. The new report is going to be 1 paragraph because with 3 paragraphs, it made it look like we were giving some assurance when we really weren't. Here, reviews changed very lightly, but they got into a little bit more detail, clarification a little bit more, and changing a few rules and making certain things requirements. So that's kind of where we're going to be going over the next several minutes, and it's pretty darn exciting.